So what we have covered in the basics so far, especially in the mortgage cycle. How it starts from the origination, right? Then it goes to processing. From processing, it goes to underwriting, right? From underwriting, it goes to, बोलो यार कुछ तो बोलो.
Closing.
Closing. From closing, it goes to funding, right? After funding, what
Yes.
comes next? Shipping, right? When we say shipping, shipping doesn't mean we are going to ship anything. It is internal shipping mostly, right? Internal shipping, we are going to review the entire file before sending it to the investor. Why we are going to review the entire file, right? With an extensive checkpoints, because we know that if we are not going to review the file, we are not going to check the quality of the file, quality of the documentation properly, it is going to be delayed. Funding for our lender, for us is going to be delayed, because it will go to the investor site, and there they are going to review, they will find documents are missing, documents are incomplete, right? Then they will stop the file, they will suspend the file, and all the conditions are going to come back to our post closing department, means post closing file clearing or loan clearing or condition clearing department. They will receive those conditions, and then they will send those conditions to the concerned department. They will ask for those documentation or review or calculations, right? They will ask the explanation, then that explanation will come from that. Let's say there was a condition related to processing department for some report that was not compliant, or that was not ordered, or not sent to the investor. So they will ask the processing department, then processing department, someone manager or TL or any associate, they are going to review again, going to find that document and going to send that document back to the closing department. Closing department is going to clear, not closing, post closing department. They are going to clear that condition, and that document will be sent to investor. It could take 1 week. So funding for of that file, means purchasing of that file, is delayed by 1 week, right? So that is why shipping department always going to make sure the right files are going to the right investors, to right purchaser, right? And then who is going to send those files? That is external shipping, also known as investor delivery, right? Investor delivery. This is the team who will be responsible to send these files to investors. What investor is, what they are supposed to do, they will see, there will be instructions already given to this team, that what are the documents, what is going to be the sequence, what are the main documents need to be put in folder. When we sent the document to investor, then a different cycle starts, right? Almost similar. So in the investor office, this origination process, there is nothing, or loan is already closed, so origination need not to be. But when they receive files, they are going to onboard those files. Somebody has to download those files from the website or from the SharePoint and need to upload into their system. So not origination, sorry, that is onboarding, loan onboarding. So that is a different now, loan onboarding. Loan onboarding process. It is at the investor's office. If you know that there is a loan onboarding process, you can easily make out that we are not working for lender, but we are working for an investor, and they are purchasing files from the lender, right? So that is loan onboarding, the first process. Then I told you it could be LRA, different name. They whatever name they like, they are going to give the name LRA or loan setup, right? Or sometimes they can give loan audit name, QA name, right? QA or loan audit or audit post close audit process. Even sometimes I saw some people give it due diligence, but this is not the correct due diligence process. But some, it's their own process. They can name anything, right? So sometimes you could see the due diligence is also given the name because these are the people actually who are checking the quality of completeness and accuracy of the file and matching all the data with their systems. When the loan onboarded team, they onboarded everything to their system, uploaded all the documents. This team is responsible to make sure all the data is correct. After LRA, next is going to be once loan is set in their system, it is good to go, means some underwriter can go and audit. So those are the process which we used to say post-closing, post-close underwriting or pre-purchase underwriting. It's not yet purchased. Once this team is going to give a green signal to their lender, to their company, that or to their investors that this file is good to be purchased, then only they are going to purchase. So pre-purchase. They are going to almost check everything. They are going to do everything in their system, in their on the Excel worksheet, and then they are going to give the yes, this file is approved or this file is suspended. They are going to raise conditions. Those conditions will go back to the shipping or investor into the lender's office, and their lender is going to fulfill those conditions. Pre-purchase, it some people used to say due diligence, some people say post-closing underwriting or underwriting audit. So there are different names. Okay, after this, again closing will take place. Now closing is going to happen between lender and investor. Lender who is selling the file and investor who is purchasing the file. So they are also going to set up a contract, AOM, assignment of mortgage. All those documents will be prepared and the ownership of this file will be transferred from lender to the investor. And then obviously next is going to be funding, right? So once file is closed or all the documents are good, signed, it will be funded. But mostly this file, it doesn't happen only for one file or two file, but those will be cleared, invoice will be generated and that will be sent and money will be transferred to the lenders. That is how. And then there could be a post-close, post-funding underwriting as well sometime. Because what happens now? Remember, what is this post-funding underwriting audit? It is different from this audit and why it is recommended or why it need to be done. What happens when we do the post-close underwriting, pre-purchase underwriting? Let's say there is one investor and he received almost 100 files from the lender. So this investor is not supposed to do the 100% file audit. 100% file will be set up, 100 files, 100 files data will be onboarded. But here when it comes to pre-purchase underwriting or post-close underwriting audit, they might give only 20% of the files, means only 20 files are going to come to this team that do the audit. Now they have done the audit for 20% file and out of these 20%, all files are complete. They are telling, yeah, these are good, all the underwriting is good, all the compliance is met, everything is good to go. So they are going to purchase the entire batch, entire pool of these 100 files. Only 20% of the files were reviewed, were audited, and based on the quality of these 20 files, they purchased the entire lot of 100 files. Then once these files are done, there is still, right, they will go through the they will do the post and funding underwriting audit. Okay, these have been already funded, but still we want to check these files. Are they complete? if there is any missing, like shipping department, right? Shipping department, what they used to do in the lender's office, they audit the entire file to make sure file is complete, because again, investor is also going to sell this file somewhere. So they need to make sure these files are correct, all the documentation, right? So rest of the 80 files plus these 20 files, all files will be reviewed here again. Means entire audit. It's not going to be very deep, but entire audit from origination till the closing, all the documents will be checked. Even sometimes it's very hard to complete one file, one audit for one file. Mostly, I have never seen that any investor in the post-funding underwriting audit giving more than two files target for a person, and it is very hard to even complete two files. Mostly it happens 1.5, or if files are very easy, then sometimes they are able to do two files, because everything there, they need to check disclosures, closing, they need to check even uh, CD, settlement statement, everything, title, appraisal, all documents. And what their work is, this work is more depend on the checklist. So there are going to be thousands of checkpoints which they need to go through each one, and they need to check, right? Okay, this is done, this is good, this is good, this is good. But it is not only they are just going to tick mark. They have to go in the file and they need to review the entire file, and based on their review they are going to check, yes, the compliance done, credit done, right, everything. And then subsection and what type of file, according to that they need to make sure the correct, because it could be one VA file, right, or it could be conventional file, it could be government file. So accordingly they need to select everything, and so that all the checkpoints coming according to that, right? So lot of compliance, lot of disclosure, they need to check everything. It takes a lot of time. Okay, that is post-funding underwriting. Are we good till this point? It is just a recap. We have already done till this point, right? Any question? Shubham, Sudhil, Poonam, Gangs, Bharat.
No, sir.
Okay, good. We are good. Okay, so now this is the entirely a different part. So let's come back to our mortgage cycle, right? Shipping. After shipping means file is delivered to investor. What is going to happen? Next is going to be the servicing. Now, what do we mean by servicing? When borrower will get the funds, will get into his property or her property, they will start living there. What happens after 1 month or 2 months? There, they need to pay the monthly mortgage payment, right? Monthly mortgage payment. But how, if you have a credit card, even a debit card, right? Bank account, you used to receive every month a statement. This is your bank account, these are the withdrawal, these are the deposits. Or if you have a credit card, you will receive a credit card statement. Let's say you purchase something for $20,000. Now what you will have next month, you are going to receive a credit card statement. But some system or someone is going to take care of it for you. What is your balance, how much payment you have already paid, what is now the new balance, what is the new payment. So every month that calculations and notifications need to be done by someone. That is called servicing team. This is the work need to be done by servicing, right? Who will do the servicing? Lender has sold the file. So whoever have the ownership of that file, they are supposed to do the servicing. Most of the lender, most of the investor, they do not do service. Mostly investor purchase files, right? Put it with them for some time and then sell the file. But why they are going to establish this servicing department, right? In the similar way, lenders are also in the origination, because servicing department is going to be totally different from origination. So they know that we are not going to hold this file for, maximum within 3 months, this file will be sold. So why to do the servicing? But if file is stuck, or even if it takes more than 3 months or 4 months, right? Someone need to do something. So mostly they are going to outsource the servicing department. Most of the lenders and investors, they outsource the servicing department. But there are so many lenders who have this origination department, right? Primary market, but they also have service established servicing department. The lender, most of the lender or many lender, they also have their own servicing department, because big lender, if small lender, obviously he will be, only in origination. So if they need to do servicing part, even a small, they will outsourcing it. They will outsource a servicing company. They will send them all the data, and then servicing department or servicing company is going to take care of them, and they are going to charge for it. Similar way, big lenders, they do not go to outsource. They have all the data, so they establish a different department, that is servicing department. Now, when they sell the file, there is a deal happens between the investor and the lender, right? And lender offered the investor, you are going to purchase file. We can also give you the servicing because we have all the data for this file, right? So we will send you one copy, we will retain one copy so that we can service your loan. Now, what happens? Investor is happy. He need not to go and find someone outside to do, to service their loans. So they feel it comfortable, they feel it more convenient, so they offer that, okay, I will purchase the file, and then I'm the owner, you do the service, and I will pay you for the service. So lender is now getting his selling his file, getting whatever profit he wanted to get, and also giving the services on the same file and get charging more to the investors, right? So that is, I mean, good business, right? So that is servicing. Whenever this situation occurs where file is sold to someone, but servicing is retained, means one copy of that loan is retained. Otherwise, if I sell you something, I cannot retain anything with me regarding that file. Obviously, data is going to remain in the system, but I cannot reutilize that data. According to the service, according to the agreement, according to the AOM, now the different person, different company, different investor is the owner of the real estate, owner of that file. So lender has no right, because they sold, so they have no right to retain something about that borrower or about that file, loan file. But here, now since they are going to close the, here when they are going to close the file, they are also going to sign a service agreement that you are going to do the servicing for my file on this rate. This, whenever this happens, when lender is selling the file and retaining the services with them, that is called servicing retained. Servicing retained, right? Is that clear? Any question related to servicing? Good. Okay. So this is servicing retained, means the file is sold, but servicing retained until this investor is going to give this contract, right? Now, after servicing, where the file will go? So next comes the warehouse. What is warehouse?